and welcome. You're watching Commodity Central on ET Now, and I am Snehi Shah. Today, let's put the spotlight on the sugar space because sugar prices have been on a sweet run globally, but Indian sugar stocks are now facing a bitter reality. After rallying sharply over the past 2 days on the back of global supply concerns and pricing pressures, sugar stocks are now seeing pressure after the government approved duty-free imports of 1 million tons until October of this year. So what does this mean for domestic sugar prices, mill realizations and the broader sugar outlook? To discuss this and more, we are joined on the show by Mr. Praful Vithalani, Chairman of AISTA or AISTA as we know it. Mr. Vithalani, hi, thank you so much for your time. First I want to understand that the government has opened up the door now for 1 million tons of duty-free sugar imports. How significant is this move for India's domestic demand-supply balance?
First of all, thanks for inviting me. And there are various steps taken by the government of India to restrict the price inflation on sugar, which is being started from 1st of July. Say we are around 50 days of this spurt. This 10 lakh ton is a very well, and we welcome the step because there are concerns in the market that the closing stock will be lower. We have the year is October and September, and concerns and other things were there. First of all, this August month, government has asked bulk consumer to offload the sugar which they have access than their 15 days requirement. Second step, this 10 lakh ton import of raw sugar. Third, in month of October, whatever sugar produced by sugar industry, there is no need of any release mechanism from government. So now there is a blind that how much supply will be there in each month. So that will take care to this rising price, and we believe that the price should go on south trend.
Okay, understood. So that's your initial outlook based on this entire measure that we've seen coming in from the government. Mr. Vithalani, with the festive demand approaching, do you expect these imports to meaningfully cool domestic sugar prices and the pressure that we're seeing over there? And how much downside could there be for sugar prices from the current level?
See, this downside is definitely depends on the parity of the imported sugar. The imported sugar is coming at 48 rupees to these refineries at their place or sugar factories, whichever is applicable. And after processing the white sugar, their cost is coming around 52, 53 rupees ex mill. And yes, the ex mill prices need to be somewhere hovering between 55 to 58 rupees. This is what we expect.
Okay, understood. And Mr. Vithalani, for Indian sugar mills, how much pressure could lower domestic sugar prices put on mill realizations and profitability this season?
Unfortunate things are that AISTA's initial, before few years with the government of India was that whenever the sugarcane price are being hiked, that is FRP, it should be linked with the MSP. Unfortunately, we were asking from last 6-7 years, and that never being followed the resolution that always FRP and MSP will be definitely be increased with FRP, and these are the results of that, because of which as I told you that October and September is our year. The industry has badly sold the sugar in first 9 months at lower than the cost of production. They have lost as such. And after doing loss of this 3-month average, I think they will have break even by only 1 rupee per kg, not more than that.
Oh, okay. We're going to be watching out for that. Thanks for that outlook. That's an important point you're making there over there. Mr. Vithalani, there are also reports that the government is considering reducing or removing the 100% import duty. Is that a realistic possibility now that that announcement has come? Can you talk to us about the kind of impact that this could put on the Indian sugar industry in the slightly medium to longer term?
No, there is no negative impact of this, because the cost to the refiners will be 53 to 55 rupees, and the cost of production to the sugar mills are around 42, 43. So there is no pressure onto the profitability of the sugar industry as such. For this 10 lakh ton, our consumption is around 285, 287 in a year. and this is hardly 3-4% of the total consumption. So it doesn't mix any worry for the sugar industry as such.
Okay, understood. So yes, that's the slight bit of panic that we're seeing in the market right now when it comes to sugar stocks, but that puts all of our concerns to rest as of now at least. Mr. Vithalani, sugar stocks have rallied sharply on global supply concerns. We've seen production issues being flagged off in Brazil as well as Thailand. In your view, how tight is the global supply of sugar actually right now?
See, as far as there are two different views are concerned, as far as raw is concerned, there is enough availability. If India want another 1 million ton, it can be available. Because yesterday, the after Indian government announcement, the NIBOT was closed at was gone high up to 1826 and closed at 1753, and that is also a negative close. So, in past, whenever government of India has approved the import, that was closed at 5 or 10% higher. So there is raw sugar is available, but yes, there is some less availability of the refined sugar. And if the refined sugar is being imported, that will cost much higher than the raw sugar.
Right, and on that note, lastly, Mr. Vithalani, you did say that the major impact is going to be expected in September, October. Those are the peak festive season months in India. We've got a bunch of festivals coming out as well. Would this festive season look any different compared to last year, purely basis the sugar availability and sugar costs?
No, see, this year, of course, the consumer will have to spend more in compared to the earlier years or first 9 months. They have got it cheaper than below than the cost of production sugar. And for 3-4 months, they will have to pay some higher price. But this will get normal from December itself.
Okay, understood. On that note, Mr. Vithalani, thank you so much for your time. That's all the time we have on this edition of Commodity Central. Thank you so much for tuning in.